Hello guys, glad to have you on board again. Today, exceptionally, we're going to switch between the experienced level podcast and the intermediate one, meaning that just for this week, we're going to take care of experts on Thursday and we're going to do intermediate level tomorrow. For a simple reason, I think that what's happening just right now is something that we have to talk about, but this is extreme level of experience required in here as we're dealing with reversals, volatility, stupidity, psychological patterns, all the things I want to talk about and teach to the experienced one of you guys. The thing is that I could be waiting for tomorrow to explain those things and talk about them, but I think those things must be experienced live so you can really profit from these things. So that's the reason why I'm just wanting to switch those things. That's no big deal, and we'll still be able to talk about the intermediate level things tomorrow. So don't get me wrong, this is not something exciting we've got to talk about, and quite the opposite actually. So if you're really an intermediate trader and you just push the play button because you're supposedly looking at the videos on Thursdays, then be aware of just one thing. If you're not experienced, stopping that video and waiting for tomorrow's one instead would necessarily be the best choice for you to make right now. What we're going to talk about is really complex. I'm going to talk about reversal trades, final exhaustion trades and stuff like that. This is a pattern I want to teach to the experienced traders, certainly not for intermediate ones. So I know you guys will mostly keep on playing that video even if it's not meant for you, no matter how hard I try to give those warnings and stuff like that. I hope you will listen to me. It's certainly not meant for intermediate traders, what I'm going to be talking about today. Only the experienced one, and I would even say these are the orange guys into Discord, which I'm directing that podcast for. So let's get it started anyway. So first of all, starting point for that video, I just took a position on the German DAX, adding from yesterday's one. So I still have yesterday's one. It was obviously without stop loss. It was a tiny position. It was just testing the market reaction in the nearby area, being totally aware, and that was the plan I told you about yesterday, that we were still dealing real close from the Bollinger Bands, those standard deviations, those volatility limitations in here. What you see there on the 1 hour chart time frame chart is the daily Bollinger Band. So we're dealing with daily volatility contracting, but still we feel like we have to go higher. That's exactly the current feeling. So we feel like we'll go higher, but still we're on volatility limitations. So that was the thing I wanted to be protected from when I traded yesterday. The fact that we would eventually, for some reason, I don't know, some catalyst or whatever, surge to the upside to find the volatility boundaries. And in that perspective, I would have much better prices. So that's exactly what happened this morning. So more than anything else, what do? I had a plan, I'm applying it. End of the story. So what have I done? I'm not just tilting and going fully leveraged to the downside and stuff like that. No, definitely not. I'm going on a leverage 1 position, which means I'm taking 1.5% capital risk for 1.5% stop loss. That's pure and simply what I just done, which means yesterday was a tiny position. I just got it pretty much reinforced today. I think in terms of sizing, yesterday was 1/3 of the global position. So I somehow sold today 2 times what I had yesterday, even a little bit more than that. The thing you need to understand is that I got an average price close to 230 or something like that, because I still have yesterday's price. And I have a stop loss for 1.5% at 140, at 430. Right, so this is pretty much, I think this is my average price, something close to this. God damn it. All right, well, anyway, you know that 430, all right, plus on top of my entry price makes 150. So yeah, that's approximately this. All right, I have an approximate average entry price of 220. All right, that's a speculative trade. You know about those patterns. I already taught them to you, but if we didn't, I'm going to go down this road anyway. So when you get this, the market that is clearly into final excessive kind of context. We clearly had the pullback in here and stuff like that. When you have the market reaching for extreme volatility boundaries, exactly this, the volatility limitations must be contracting, which means we must have narrowing amplitudes of the Bollinger Bands. We're reaching out for extreme volatility limitations, and you have a breakout target. When you've got this, you know you need to short and not even think about it. These patterns, they don't work 100% times because obviously nothing does that, but you already know it if you're an expert. So I'm definitely getting into the trade without even having second thoughts. This is what I wanted yesterday. I just thought I would have to get in just in case we won't be doing this. We're doing it. So I'm jumping on the occasion. I'm definitely getting that trade. Anyway, that being said, let's move on to the danger I want to warn you about, because I know what this context is. I've lived that thing before. Oh, I don't know what that context is. I fear what that context might be. And it just reminds me of an old trading situation. I mean, years ago. It's just the last time I felt that. That's a feeling, that's an intuition, all right? It's definitely not something I can rely on in order to trade, but that's something I want to teach you, because that's an old structure that's ended up taking me quite significant losses back in the days. Something close to a 10 to 12% drawdown in those old days, so big losses as well. I remind those trading contexts, and what I see today somehow reminds me part of that. And this is the reason why I want to warn you and teach you about it, so eventually you can learn from my previous mistakes and adjust accordingly. So let's dive straight into what I'm going to talk about. The last time I felt something similar, really, we need to be honest, all right? It's a feeling, though it's certainly not something that will trigger any action from me just because I feel something. I don't do this, all right? I don't trade because I feel. I trade because I feel something, and then I have information suggesting it happens, all right? So for now, I don't know. This information suggesting it may happen might be forthcoming. But what I'm doing right now is explaining you what I felt back in the QE days in the euro area, especially March 2015. Because if you follow my guidelines and stuff like that, and if you follow my strategy, you definitely would have been looking for it for selling entries right in this area. Let's just dive into this, all right? We were rising and stuff like that, getting in here, having the pullback in here, and making the final excesses. So starting in here, all in this area, everything in there was just speculative selling entries for me, for reversal trades and stuff like that, all right? So it was anticipative trading, though risky and stuff like that, but I knew, and I had to sell it anyway. The market those days just flushed me out for like 10% on top of my entry prices. And it made absolutely no sense. Yes, we had QE and stuff like that, but it was obviously stupid as hell. And as a very rational person, it just brought me to a very dangerous corner in which I wanted to fight because it was absolutely senseless. I had my technical signals and I had everything I needed to sell, but the market just didn't want to sell. Volatility was extremely low, so obviously when I was selling, the market never gave me enough risk limitation to take my first profit taking, reduce my risk taking, putting down my stop loss and stuff like that. So that's the big problem I had to experience back in those days. The market was irrationally bullish and without a single ounce of risk limiting, which means the market wasn't trading. The market was moving for alternate reasons. Those reasons were purely a paradigm. The market back in those days was exactly feeling what we're living right now. They were feeling that the QE in the euro area would be the Mario Draghi's whatever it takes, which means we will have so much money that prices could only drive higher. That was the paradigm back in those days, and basically we were rising, we didn't even know why, we were just rising because we couldn't do any different. Obviously, future told us that that wasn't really a smart choice to buy those prices, but obviously, if you appreciate risk-taking, you might understand that if I took the trades in here, all right, and hold them for 10%, meaning that I was trading with a significant amount of risk-taking, all right? Back in those days, I was a little bit too aggressive, which means the problem is if I holded this, I would have suffered quite significant drawdowns to get to a profitable trade, yes, of course, but it didn't really worth the risk. So what I'm experiencing today is the exact same thing. The problem I had back in those days is that I took a trade and I decided to hold it. That's the mistake I've made back in those days. I took this trade and I still remember it. I think it was even lower. It was in these areas, all right? I had the bearish engulfing, everything needed for me to say, all right, great, I'm going to have my risk limitation, everything will be fine. And then the market just started to prove me wrong. In here, but not really long. And I still remember those days. It was just proving me wrong. Like, it wasn't happening the way I was expecting it to be, but certainly not enough. And then this thing happened. And I remember that day, and I will always remember it. That's what we're living right now. And that's what we may live right now. And that's really why I'm being real cautious regarding what I'm going to be doing over the next 48 hours, or let's say over the course of the next 2 to 3 sessions. Because if today we don't reverse, I think the risk is to get into this very dangerous road, which means we might be bullish for the next couple of weeks or for the next two months and something like that for totally irrational and stupid reasons. And God knows how high we can go. I mean, all right? So back in those days, we already had a lot of gas burnt, which means in here we just got divergent because we were lacking of energy. Now we are in a totally different system. The problem is now we might just reaching to historical highs in the German DAX. So if you take that previous experience and put it into nowadays market, all right, the potential might be significantly higher than what it was back then. So now let's just move on to weekly chart because I think that's exactly what we're living. All right, if we're on the verge for stupid, irrational, just how high can we go before we break the toy? And obviously, this is the counterpart. We just erased the entire movement. Reason why I tend to believe any way of what we're doing right now will be entirely erased. And I stand on this. I still believe it. Everything we've done in 2019 will be entirely erased. And not in 10 years. I think it's going to happen within next year. I just don't know why, but I don't know what will trigger that shit. All I can tell is that we'll erase everything we've done entirely, and at least 90% of it. And just like I said, if we don't go 11K on the DAX within next year, I will be freakingly surprised, and that will be even more dangerous. That doesn't mean it won't happen. Like I said, everything's always possible. If you think something can happen, you're just not trading. So if the German DAX just fly next year, like let's imagine that next year we're doing something like that, 15K, 16K, whatever, right? Just imagination is the limitation. If we do this, let me be honest, the only thing I'll do is I'll close my trading account, I'll move to countryside and just get the hell as far as I can from the central from the city central stuff and stuff like that, because what's going to come right after will be freakingly ugly. Either it's going to be war, or it's going to be riots, or it's going to be extreme answers from the populations. Certainly things I don't want to be along. I have a son. I certainly don't want him to be in that mess. So if we're going down this really rough path for the future, I mean, the only thing I'll do is just protect myself, right? I don't really need to make more money today, so I'll just move to the countryside, stop trading, and let the world destroy itself. I don't really think that's going to happen. It's too dystopian for me. So if we eventually go down this road, what will happen next will definitely be ugly, and I don't want to be part of it. But like I said, profiting from this in a trading perspective wouldn't even be my goal. I'll just move the fuck away so the mess will be for others who stood there. I don't think it's going to happen. It's too extreme. It's too... All right, I don't like extremes, all right? People seek for extremes, but when we get close to them, we generally reverse. So that's the reason why I don't want to believe that dystopian vision of the world. But still, can happen, all right? On the other option, we could just try to capitulate for a bit, like just inching a little bit higher. But the question is, can I take it? And the answer is, I might take it today, like I take the bearish entry. If it doesn't work out, I'm taking my stop loss. I'm not going to fight. I'm not going to let go just like I've done in the past, because it costed me 10 fucking % capital to take that trade with leverage to basically being stopped out right in here. Right? The market just going sideways afterwards. But the problem is when you're facing this, you never know if you're going to stop at 13K or if you're going to go 14 or whatever. And as you don't know, you can't trade. Though you have to take your stop losses. And it's either you're going to take them the way you expected them to take. Like, I'm ready to take the 1.5% stop loss tomorrow. I'm really willing to take it, and I'll have no problem with that. Simply because I remember the mistakes I've made back in those days. Taking exactly the same type of trade I'm taking today, and instead holding it to end up with a 10% loss. Though I don't want to be making that thing. I'm going to take my fucking stop loss by the end of the day or tomorrow or whatever. If it goes 430 and 30 on the DAX, I'm out, end of the story, period. The thing is that I don't know what's going to happen over the course of the next 24 hours. Either this is just a trap and we'll probably end up with an ugly upper shadow candle for the week, and probably tomorrow will be crazy bearish. Option number 2, this is that kind of trade in which we accelerate on the daily trade, and that's the breakout, which means we just break out of rationality and we're just going to try going as high as we can. The problem is we can just inch 5% on top of the historical tops, like we can trade this trend line and just stop, or we can go there. And the problem is, as you don't know, holding is not even possible. And I know that you guys will try too, even experienced traders, all right? Because it makes no sense. You've got everything you need to risk limits as a reversal trader, and you've got experience, you've got whatever you need. Just this time, one thing will fuck you up: irrationality. Because when you learned a technical strategy, you rapidly get into not a belief, because I told you normally at that stage you're experienced enough to understand that believing is not really what matters in trading. It's more like risk managing and stuff like that. This is the rare moments in the market. They're really freakingly rare. They don't happen every morning or stuff like that. Really, really, like I said, the last time it happened to me was 5 years ago or 4 years ago. So there's always something to catch up on you, and you'll always make those mistakes at least the first time you came across them. So if you can learn from my previous mistakes, not to make your own, I would be pleased. Obviously, if you have to make the mistakes on your own, I can understand that. But if we ever go down bullish capitulation, which means if we don't reverse what we're doing right now, this crazy fucking stupid 1% upward move based on nothing, there is not nearly a single information today suggesting we're rising. Back in those days, it was the exact same thing. Bad news were coming. We didn't nearly care. It felt like bad news was good news. Good news were extremely good news. And that was the replicate. Afterwards, I was right. Anyway, selling those prices provided gains. Just holding them is not going to work. The difference we have today is that back in those days, anyway, I knew that this wasn't the end of it. Back in those days, I knew that I would buy the pullbacks afterwards. All right? I knew that on a global mid-term scale, we still had gains to make, though I knew that we would probably have pullbacks to buy. All right? And when we got stupidly crazy bullish in here, we've been crazy stupidly bearish in here. I remember what people felt in this area. It was the end of the world. We were looking for a supportive area. The market would obviously be the end, crashing, whatever. It was inevitably going to the downside. That's exactly when I bought. All right? So I've been a little bit too stupid in here. I've been perfectly buying the dip in there on the German DAX. I just don't want to make the same mistake today. We're close. We're getting close to dangerous area. That doesn't nearly mean we're getting there. So I'm taking the trade today with its own risk limitation. If the trade is taken down, I'm out, and I'm going to leave it for probably a couple, let's say, between 3 to 5 weeks. I'm going to let it go as stupid as it possibly can. But believe me, the day will reverse. I'm not going to take a tiny trade, meaning that I'll take a tiny position sizing, all right? Because there will have to be a very, very large stop loss. I'm going to wait for a bearish engulfing, obviously, all right? It feels like back in those days I would have waited for this, sold in here, but this time I'm not going to sell for a pullback. If we play this game, I'm selling for a 35% drop on prices. And this time, remember, I told you that I'll probably hold on to go lower, which means I'll probably have an extension. If we go stupid, we'll go stupid the other ways, which means the targets I have in here, I'll extend them toward lower valuations. All right? And in that perspective, I think the DAX will break those levels. The 2016's lows will definitely fuck them up if we play that dangerous game of trying to reach out 14K, 15K, whatever stupid prices that might be. All right? And like I said, if we ever go down this road, which means if even after 3 to 5 weeks, we're still heading toward magical tops with parabolic scheming structures and stuff like that, the only thing I'll do is close my trading account and start moving countryside. That's not something I'll do over 2 weeks, all right? It's just a process I'll start over the next quarters in order to be fully out of CD sites and stuff like that in, let's say, 6 months. Because I think if we play that dangerous game, within 1 to 4 quarters, a very ugly thing will show up, and you'd rather like to be as independent as possible. And in that perspective, just like I said, collapsology and stuff like that that are recently emerging, all those extremely extreme contexts will be at play. Just like I said, if we go extremely stupid one way, we'll go extremely stupid the other way, which means I don't believe we're going to fuck up the society, fuck up the financial systems, install bitcoins and stuff like that. But if we do play this game, oh, you can be damn sure that we will. If we go extremely stupid, we'll go extremely stupid the other way. If we go just an inch stupid, we'll go an inch stupid the other way. If we don't go stupid, we're not going to go stupid the other way. Which means if we reverse in here with the German DAX, all the indices in the US is stupid. All right? Let's make it straightforward rather than prior to moving then to something else. US is stupid. All right, so we've already gone to stupid historical highs. We've been stupid because we should never have gone on top of 2018 market top. So we've gone stupid in the US, and we're going to have to pay for that shit. I stand on this. This will be because of dollar. And when we'll go bearish, we'll have to go stupid bearish in Wall Street. That's just Trump. All right, Trump is stupid, and he's going to bring stupidity in the market. It already has done that to the upside. Believe me, it will do quite the same on the opposite direction. So I know anyway that Wall Street, I'm not going to buy the prices I expect to buy. I'm going to buy lower prices simply because the market will be stupid in those days. The simple replicate of this stupid bearishness, stupid bullishness we're experiencing right now. Are we going to reach a limit today? I think that's possible. Reason why I'm taking that trade, because that was my plan and everything like that. If it works or not depends on the market. Certainly not on me. The only difference is this. If I see that we're switching to irrationality, like bearish capitulations, the bears doesn't sell because they don't know what the fuck is happening. If this thing goes on, stop selling. Simply stop selling and wait. Because if you do just like I did back in those days, fighting irrationality, then it's not going to end pretty. All you're going to do is probably multiplying what could be a normal loss, a 1.5% stop loss. It happens. I take these kinds of stop loss most of the time, and I don't nearly give a shit about them. The thing is that if you want to switch a 1% stop loss into a 10% just because you want to experience stupid market behaviors, well, then if you're willing to do this, then go for half a percent in the first place. And instead of taking a full leverage position, just like I'm doing right now, if you really want to hold, sell and hold to experience the stupidity all by yourself and feel those things, then at least learn from my previous mistakes and divide the position sizings today. If you're willing to take that trade, and if you think that you're going to hold, then just reduce the position sizing. Protect your capital. Like 10% drawdowns didn't nearly kill me back in those days. It just hurted me, and I was back in the game 3 days after. The thing is that I think those mistakes might be necessary for some of you guys. Like, you will have to experience this to learn the mistake. If you think you're going to go down this road, just protect yourself a bit. You're still going to take a loss. You're still going to take an above average type of loss if you go down this road and if it goes the rough path. But at least you'll lose less. Like, what's the point of losing 10% to get to be taught a lesson? I mean, you could just lose 3 or 4% and have the same lesson. You're still saved some capital. At some point, I do understand that taking those lessons by mistake might be necessary. I think that's part of the process, actually. But I mean, just be rational, protect your capital. You know it's dangerous, all right? I've been there before, so I don't have to make that mistake again. But if you feel like you're going to be doing it, protect yourself. All right? That being said, I wish you guys a good weekend. Unless you want to be there tomorrow for the intermediate level, obviously. I hope I taught you something today, but I really wanted to make that podcast. And I think it's important because right now something is happening. And by the end of the day, we'll have something interesting to talk about. Either the market will reverse, either today or tomorrow. I don't know what may be the reason, and I don't really give a shit. All I care about is that if the market doesn't reverse in the nearby area, something ugly may show up within the next few weeks.